Welcome to the Global Wellness HQ family of podcasts. We are your international headquarters for resources and ideas and insight in relation to the 9 elements of holistic wellness. Join us as we interview local and international wellness experts and learn how you can implement and improve one element or dimension of wellness at a time. Our experts will share their practical tips on wellness in one of these core areas: emotional, intellectual, occupational, physical, environmental, financial, spiritual, social, or habitual. We created our family of podcasts as a resource for anyone who is looking to integrate the 9 elements of holistic wellness into their daily lives. Welcome to the show.
Hi, everyone. Welcome to the Cash Flow Club podcast. In today's episode, I'm going to talk about something I call the client portfolio analysis. And I don't want you to get too hung up on the exact how. What we're going to do today is we're going to talk about more the why. Now, for the record, this is something your accountant or bookkeeper should love doing. It's something your accounting software should make easy for you. And basically, what we're going to do is look at our clients and we're going to figure out mathematically and unequivocally who the best ones are and maybe who the worst ones are. Now, for the record, this is not a judgment of your client as a human being, it's a judgment of how they contribute to the profitability of your business. And if you don't know who your most profitable clients are, how do you know which clients you want to duplicate, clone, and replicate? So, one of the things I start with is I identify the criteria: what's important to me in my business. So, as an example, if I'm looking at cash flow, I want clients that are first and foremost profitable for me. And in that, that means I understand exactly how much profit I earn from them in a given month, quarter, year. Again, this kind of analysis should be done at least monthly. If you do a big deep dive quarterly or annually, that's okay, but you should at least be looking at it monthly. Are you meeting certain targets? Are these clients profitable enough to pay your bills? And that's the thing. I've seen many, many clients, they don't recognize it, but their clients are declining in profitability, their margins are shrinking, and the cash flow is struggling, and they don't recognize it quickly enough. So that's how important understanding your clients is. So first criteria is, are they profitable? If they're not profitable, my question is, why are you working with them? I've actually seen this analysis over and over. This is where the Pareto principle comes in. One of my clients, we found out roughly 80% of their revenue came from 20% of their clients. So if you think about it, 80% of your revenue, 20% of your clients, those best clients are subsidizing everybody else. And in that particular case, if we had carved out or sold off or eliminated the worst clients, even just the 20% worst, the business would be more profitable. There'd be less headaches, less stress. So that's how important good clients are. So, first thing we do is we figure out what our criteria is. I would argue if you're in business, number one criteria is profitability. Now, for me personally, I like clients who are interesting. I like clients who value me. I like projects that are fun. So I'm going to prioritize that. You're going to have your own criteria. And what I recommend is you think about your top five. So I always start with revenue because if they're not profitable, no matter how much I like them, they don't belong in my world as a client. So first things first, if your clients aren't bringing you profits, you need to look at how do you either make them profitable or how do you remove them so that you are profitable. And by the way, this analysis is critical. If you can identify your top 20% of your clients, you can reach out to them, ask them questions, say, hey, how can we help you? How can we add more value? In most cases, I've seen businesses replace their 80% less than desirable clients by serving their top 20% better. And by the way, if you treat all of your clients like they're the same, that means you don't know who your best ones are. You're going to struggle with your cash flow. So one of the things we do is we focus on that profitability. The second thing is, do they pay you on time? So, my favorite clients are the ones that pay in advance. My next favorite clients are the ones who pay the day of. And my least favorite are the ones that take time to pay. And there's a spectrum there, but the reality is, if you think about a restaurant, you would not see as many restaurants around as you do if they had to wait 30 days to get paid for the meal you eat today. So think about your model. Again, gift certificates, gift cards. That was a model the restaurant industry and others created so that they got the cash in advance. So if you think about it, how do you get paid in advance? How do you get paid today? How do you get paid tomorrow? And you want to eliminate anything where you're getting paid later than 15, 30 days out. So I always want to accelerate inbound cash. So one of my criteria, somebody who values me should pay me. And fun fact, the more they value you, the quicker they pay you and the more they'll pay you. So that's why we want to do that analysis. So if you want to talk to your accountant about this, the question you would ask is, who are my best clients and do they meet my criteria? So do they pay quickly? Are they profitable? I promise that's the kind of thing bookkeepers and accountants know how to do. They love doing it. Have that conversation. You just need, as a business owner, to understand why to have that conversation. And I will rant just for a second. If you don't have your books and records up to date, you can't do this analysis. So, again, as I've said before, and for most of what we do, you need to have your books and records up to date. Now, if they're not up to date because you're worried about falling behind or you don't have enough cash, then you might have to look at how do we bring in more cash. But I would argue if you're trying to do that, you're doing it blind. So have your books and records up to date and figure out what your criteria is. I'd love to hear your thoughts on this. This is literally after we've talked about the financial statements, after we've got the reporting done, after we've looked at payables and receivables. This is my next thing. And by the way, almost everything we do going forward in terms of increasing revenue, accelerating the cash coming in, is going to hinge on this client portfolio analysis. So if you're a little nervous and you don't want to do all the math and you don't want to wait, I'm going to give you a tiny little shortcut. Pick your top 10 favorite clients and again, criteria, they have to be profitable, they have to pay you on time. Pick your top 10 and reach out to them and say, what else could we do for you to make your life easier? So that's my little rant on the importance of that client portfolio analysis. I would argue if you're not willing to do it, you're going to struggle. So please, let's have a conversation. Let's talk about how we can improve your client portfolio. Thank you.
Thank you for taking the time to listen to our show. We hope that you enjoyed this episode, and we invite you to either click the link below or scan the QR code to register and listen to other episodes of our podcast. Or if you think your business or you would be a great guest to be on our show, we're always looking for experts in one of the 9 elements of holistic wellness. We'd love to have you. You can either click the link below or you can scan the QR code and complete our speaker intake form. Thank you, and to your wellness.